All right. Welcome back. Okay, so now this strategy that we'll be talking about today is going to be helpful for every pair. And before we go ahead into this strategy, I want to appreciate those who have subscribed. If you have not subscribed to my channel, please, okay, I'm begging you, I'm on my knees, just subscribe, turn on the notification bell. If you have subscribed and you've not turned on the notification bell, just do it, because by next week I'll start posting updates. Now, what the updates are helpful updates, so don't think I just want to waste your time. There are things that will help you to know the direction of the market, so that you know what to do, the direction you should be hoping in a particular pair. You don't really, it's just free of charge. All you just need to do is just come and watch it, and as time progresses, that we have more engagement. So because it will not make sense if you don't have much engagement that you do live video. So I would have loved to start live session from next week, but we are able to clock up to 5,000 or 10,000 subscribers, that we can actually have the certainty that we have up to 1,000 people that will be viewing at a particular time. There's no reason why we should do live video yet. Okay, so that, or I will not stop the aspect of posting the weekly updates. So meaning that if you don't even have the opportunity to watch immediately, you can watch some minutes after, some hours later, and enjoy it. So just turn the notification bell on so that it can be very helpful for you. So in the last two videos, we talked about volatility 100 and volatility 75, and I want to be grateful that many people helped me share the video to people, and it's been ranked among the top viewing video on YouTube, that in less than a week I'm able to, on the volatility 75, we're able to have above 2,000 viewers. I'm very much grateful. So if you are the one that have actually been sharing, thank you very much. If you've not been sharing with friends, it's good to share with friends that know trades. It's very helpful to them. It's going to be very helpful. If you've not watched it, go ahead and watch that video. It's an helpful video. So do well, subscribe, and let's quickly dive into what we have today. So today, in the previous videos that I've been doing, I've actually given out indicators for those who have system, and I know many people have watched the video but they don't have system. Then they have feeling like, does it mean that we don't have system, we cannot trade forex? The truth is, you can and make good profits, and I believe the money you generate through the phone, you can buy a good PC, a good system for yourself. I believe you make $1,000 in a month, you can comfortably buy a system of $500. So I just mind that you need to set your mind right and believe it's possible, it's going to happen. All right, so now this strategy I'm going to be talking about today, it's also moving average, but it's quite different from the moving average that you have used before. This moving average will help you to create virtually all the pairs. All the pairs. Anyone you pick, boom and crash, volatility, step index, jump, as in every pair, you will be able to trade them. And I'll show you an example here. So now the strategy, the stuff you're going to put is two things, just moving average and your stochastic oscillator. Now the moving average values are, I believe I should not be talking about how to slot the moving average, but let's assume you don't know. Click on the charts, a circle will come up, click on the F on the circle, then you will see if you've not had any indicator on your screen before, and the whole thing just show only candles. You don't have any other thing. This place under the main window and indicator window, you will not have indicator window one. What you have is main window, and nothing will be there if your chart is free. But if it's not free, I will advise you every other indicator that you have before, you can write them down somewhere if you still think they will be useful to you. But I assure you, after this, okay, it's not going to be useful again. These will be useful. If you don't use this, that means you are using the previous indicator that I gave, the moving average that I gave for the volatility. I'm very, very sure. Me, I'm certain. Very, very confident. Okay. So now, what are the things you're going to use? On the main chart, you're going to have moving average only. Moving average 300 and moving average 100. So moving average 300, we have 300 linear weighted close. Then you choose a color, done. The second moving average is 100 linear weighted previous indicator data. Now apply to previous indicator data, meaning that the 300 moving average must always come before the 100 moving average. Then you click on done. Then after that, in front, if you don't have the stochastic on your chart before, what you do is just in front of that main window, just click on the plus, look for stochastic oscillator, click on it. Automatically, stochastic cannot be on the main chart. It will be on its own separate window. So it will put it on window 1. Then at that moment, you put stochastic. Your stochastic is just a simple stochastic we are using 111, the percentage K, percentage D, and slowing 11. Low high for the price feed, method simple, the level 80 and 20. Now the 20 being the oversold. If you want to write the stuff there, if you want to write it, why the 80 be overbought, that's if you want to put it there. But I don't think it's important, but if you think it is important for you, put it there. All right, so after you have this, you now, before you click on done, your main and signal, ensure that the color for the main and the signal is the same color with your background, the background of your phone. If your phone background is black, go and find black color and choose. The reason is because the main and the signal looks like moving averages, but we don't want them. Entirely, we don't want them. The only way you can remove them is by changing their color. You cannot remove it naturally, but if you change the color, they will not show. So if it is black that your chart background is, make sure you put it as black. If your chart background is another color, just make sure that any color that is the background is what you choose. You can see mine is white, and I also choose white. So after you then click on that, you click on done. Then you now click on add. You add moving average 300, shift 0 method, linear weighted. Apply to weighted close, the same moving average that we have on the main chart. Then you click on done. Then the second one is moving average 100, shift 0 method, linear weighted. Apply to previous indicator window. Don't forget the 300 comes before the 100. Then you click on done. Don't also forget to change the color of the moving averages, because 300 will show you a color, 100 also supposed to show you another color, so that you know when they cross. If you don't do that and the both of them are having the same color, you'll be confused because you might not know when they cross. Okay, so when they cross, you'll be able to spot quickly. Like my own, you can see blue and yellow, except I close my eye, that I will not know when they cross. I will be able to know when they cross. Okay, so now once you click on done, we are through. We don't need any other indicator again on your chart. So now what you need to do now is to look for opportunities. You buy when they cross below the 20 level, and also they cross on the main chart. The truth is that since you're using the same moving average, they will cross at the same time. Just believe that both of them, the one on the main chart and the one on stochastic, will cross at the same time. But the only thing is that there are times that the one that cross on the main chart cross, but on your stochastic, they cross not above 80 or below 20. But the only time that is suitable for entry, it is when they cross above 80 or they cross below 20. So if it is not there, it is not right to make entry. It's not safe to make entry. Okay? So, for example, this is jump 75. Now, the cross here, the first condition is to see that on the main chart they cross. The second one, to see that on this point that they cross. Now, did they cross? Yes. They cross here. Both of them, you can see, they cross at the same spot since they are the same thing. Now, like I've explained in my videos, when you are using moving average, expect the market to return back very close to the moving average, or even allow you to touch any of the moving average. Now, very close here, you see make entry, make profit. Touching the moving average, the market keep going. Now, where is it safe for you to close your trade? three ways you can close your trade. Number one, the moment they touch 80, if you are buying, the moment they touch this 80, meaning that even if the yellow touch the 80, you can quickly exit, because my yellow is the 100, so the 100 will first of all touch the 80 before the 300, I believe so. Okay, and if you are unlucky that if it is the blue, also the 300 that touches before the 80, not, and that touches before the 100, if it is the 300 moving average that crosses before the 100 moving average, is not bad. The point is that any moment any of the moving average touches the overbought or oversold, you can close. That's number one. Number two is you can also close whether when you have a profit target, when your profit has been met. Number two. Now the number three way you can also do is to wait until the market gets to the overbought or oversold level and both moving average crosses each other. Okay, now in this case, sometimes it will be very good that you will make exit at the perfect point. Market will not have really retraced so much. But the other time where it might not be safe is when the market is already touching below your moving average and the moving average have not yet crossed. For example, you can see this market is still touching moving averages but has not come below. Now, if this market comes below the moving average and yet the 300 and 100 moving average are yet to cross each other, it is good you quickly exit that market at that moment. The profit you've made is enough. Okay, that is any pair you're trading. Now let's look at opportunity on jump. Yes, there is opportunity on jump, and I would like us to take the advantage of the opportunity. So we sell. Now I'm selling, and this is a practice account. Don't forget. The reason why I don't use the real account, you can see the market has actually moved. It's safe to make entry here when they almost touch the moving average compared to here when the market has already moved. Okay, so I think I have only 2.0. Okay, so I'll be exiting one since it's not this perfect entry spot. So I'll be exiting very soon. Okay, let's just look at another pair. That's jump 75. And where will I put my stop take profit? So let me just look at where we can put take profit in case the profit here. Okay, let's put take profit there. Okay. All right, let's quickly look at another pair. Jump this, opportunity, jump 10, jump 100. They have not, is about to cross, but it has not crossed. Okay, jump 25, no opportunity. Jump 50, no opportunity. Okay, on the jump there's no opportunity yet. Then let's go to step index, no opportunity. Volatility 100s, no opportunity. Volatility 100, no opportunity. Volatility 25, not opportunity. Let's look at on 1 minute, no opportunity. 50 on 1 minute, there is little opportunity. Let's check on 5 minutes if the opportunity is right. So we can take the advantage of the opportunity. Let's take advantage of this opportunity. Now, So I will reduce the volatility 50. Let me see, it's not suitable, so let's exit. Okay, because 1 minute also has even more, so I'll be exiting in profit, not in loss, I guess. But if the loss too much, I will just close. But I expect the market to give profit, so and that's going to be enough. It's going to exit now, so we are out of that one particular trade. Then the volatility is 75, so I promise to close one, and this jump 75. You know the reason why we cannot hold jump 75 also so long. So let's look at another pair. Boom, 500. No, this 1 minute. Let's check 5 minutes. No opportunity. Okay. Crash. No opportunity. Excuse me. Volatility 75. No opportunity on 5 minutes, but of 1 minute. Okay, 1 minute is telling us to sell, but the market that is already selling already. So can we take 0.2, 1, 2, 3. So we can see now, most especially with the volatility on the 5 index, you can see the market playing out as we expect the market to play out. It has not touched the 20 moving average yet, and the 20 mark point yet, but it's very close to 20. So at that point, we can start considering whether to exit the market or not. But the market has not yet given us a reason why, a doubt why we should exit the market yet. So let's check what is happening on jump 75. Remember, the conditions were not right when we make entry. Okay, it's just retracing a little bit up. I just wish it retraced back on time so that we can use it as a cover picture for the video. We just take the jump out of the trade if it doesn't quickly return back, because I would like to have a cover video for this based on what actually shows here. And now you can see volatility 75. We are supposed to close the trade now. Now why? Because it is now at 20 level, and you can see the profit margin, very heavy profit margin, very heavy profits that we have made so far. So let me just take this off so that it can be good to actually use, as we know it's still going to give us opportunity for exit. And now we can now close volatility on the 5 and close, because now the market has the conditions are met, the profit, you have made the profit. You can see if the volatility, if it's the jump 75, also the same way we would have actually been able to close the market. So any pair you want to trade, the same method, 5 minutes, 1 minute, 15 minutes, any time frame you like, just place it, let the conditions be met, make your entry, then wait and allow the markets to play out. Like I said on jump 75, the reason why we have to exit that market is because we end up so late. We don't even know we are going to see the opportunity on fix 75 like that. We will not really go to jump 75 and trade it. But no matter what, just look for any pair you like. If you want to trade all of the pair, you have all the pairs now. The strategy is so simple that once you master it and you use it, you can make enough money. All right. Thank you. Please subscribe if you're not subscribed till the end of this video. Subscribe, please. And if you've subscribed, thank you very much. See you in the next video.